All right, what's going on, guys? Trev back again, here to bring you another video. This one's going to be doing a fun Bitcoin slash cryptocurrency type of video. I want to give my thoughts on cryptocurrency and Bitcoin as we get closer here to the end of 2018. And spoiler warning if you didn't know. No. I'm sure basically everybody knows that Bitcoin absolutely got killed this year. 2018 was definitely not Bitcoin's year. We're basically at the end of the year now. It's December. So, a few weeks left here and we'll be into 2019. So this one was pretty surprising with cryptocurrency, considering last year at the end of 2017, it was just doing incredible. 2017 was an absolutely amazing year for cryptocurrency. It was just killing it. It was doing amazing. I saw videos all over YouTube online. People, just celebrating and having fun. Because basically, here's the deal. Anybody who bought any cryptocurrency pretty much last year made a killing. They did very, very well. I mean, to the point where, you can look at the different charts for 2017 for different cryptocurrencies, but they basically all pretty much smashed it, in 2017. So going into 2018, we all pretty much thought that that trend would probably continue and it would continue to just grow and grow and grow, and people wouldn't really, just get tired of it so quickly. But, this year, I mean, some different things happened, obviously, as things always do, but all in all, a whole bunch of people decided that they wanted out of the game, right? They wanted to sell, and as a result, Bitcoin's down basically, as of right now, at the time of filming of this video, from the start of the year, around 75%. So, and even more so if, depending on when people had bought in, maybe last year, if it was like November to like the high around, close to the end of, around like close to this time last year really is when it was at its highest point. So, and other cryptocurrencies as well too, certain ones, being down even more than that, to where some of them are down like 90%, from what they were. So, crazy stuff to see, man. Very unexpected, but that's kind of the way the real world is. It's very unexpected. You really, with regards to the future, you have no idea what's going to happen. And with holding something like a cryptocurrency, like a Bitcoin or Ripple or Ethereum or whatever else you go with, if you do want to get some, it's like, a hodl or a hold on for dear life. Just you have no idea what's going to happen, right? It could shoot up like we saw last year, or it could absolutely dive bomb like we pretty much saw it do this year. And it's not like this is something that hasn't happened before to cryptocurrency. This is kind of the way it pretty much goes. It's up and down like a damn yo-yo. And again, the future is very uncertain for, how in use Bitcoin is going to continue to be, and other cryptocurrencies. There's more competition coming into the space now. I saw a commercial earlier today from IBM where they were talking about using blockchain in some way that they have they're coming with. So you've got other, big name players, of course, starting to use blockchain technology, starting to come into this kind of space. And it really is, there's really no way to tell what will happen in the future. People can do their price predictions. They can say that Bitcoin by, 2030 will be worth $1 million or whatever. But, there's really no way to know that. I mean, that depends. It all depends on usage. It depends on, how confident people are in it, right? If people are really confident, they want to buy in. I mean, really, at the end of the day, that's the only thing that really drives the price, is if people want to buy it and what people are willing to pay for it. And basically, if you have a few people that are willing to pay a bunch, you have more people buying than people selling, it's going to drive the price up. People are going to have to pay more and more and more, to the point where people drop off of the people who want to buy it. And vice versa, it can go down just as fast as we saw this year with people wanting to sell it. A whole bunch of people want to sell it, not as many people want to buy it, driving the price down further to the point where those people decide they're going to sell it for whatever, and people decide they're going to buy it for lower amounts. Otherwise, they decide not to. So you have more people selling than people buying, and thus the price goes down. So that's why you can see these huge, ginormous swings in it, just based on what's happening with people, whether or not they want to get in or they want to get out. You have a lot of people wanting to get in. The price skyrockets very fast, in just a year or two. It can go up, like crazy for something that's new, and vice versa. If a whole bunch of people want to sell, you could see a drop 75% to 80%, crazy amounts in a single calendar year as well too. So what's the lesson, or what's the takeaway, from it? I mean, with just how volatile it is as an asset class, if you even want to consider it to be an asset class. I mean, if it's something that you do hold, for me personally, it's diversification as it's always been. It's diversify as much as you basically can. When I did a video last year when Bitcoin was at its pretty much its peak, and everybody just wanted to get some, and it was huge fad, and it was all in the news, and everybody was talking about how much money they'd made in 2017 on the damn thing, and everybody just wanted to get in so bad, right? Because they just kept thinking it was going to keep continue to skyrocket. Moon, right? And it didn't end up being that way. So I think the thing is with it, just the same as a stock or the same as with anything else, if you can diversify, the more the better. The more you can diversify. So if you're gonna hold some, like for me personally, the way I think of it's like with regards to cryptocurrency, maybe you balance it to like a couple percent maximum, right? Like you give like maybe 1 or 2% or something like that. Maximum is really all you want to hold, because otherwise if you go, I mean, it depends on what kind of investor you are, what you're looking at. Like if you're looking at something where you're okay, if you're kind of a high risk taker and you're okay with huge volatility swings like that, then maybe you could hold a higher percentage of what you got in it. But otherwise, it's like, you may just want to hold like 1% or 2%, if at all, or, for a lot of people not. But you can use the same thing with stocks. Stocks are really, have done really well the last, like since 2008, really 2009 recovery. And since then, they've done really, really well right up until now. So it's kind of like once things get up to a peak, to the highest point, that's a time when you got to kind of, not be so, it's like, it's funny because it's like the opposite of how people act, right? Look at last year. The end of last year, everybody's so confident. They're so into it. And that would have been like the worst time to buy into crypto, right? Would have been at that time. So anytime you see, majority of people doing one thing, it's like if you get in at the same time everybody else is, you're probably doing the wrong thing. You kind of have to be contrarian in a lot of ways and get in when it's not the hot thing. If you always get in when it's the hot thing, you're going to get burned, because once it people are not as interested anymore, it starts to go the other way, right? It starts to drop like crazy when people get tired of stuff and that whole thing. So, but yeah, man, I mean, the more people can diversify, and not just in one asset class. Like you want to diversify in every asset class probably as much as you can, pretty much. To stop when the drops happen or when things go down. Same thing with stocks. Same thing with with crypto or even real estate and things like that too. You probably never want to be too concentrated in one because of the potential for losses and how hard it is to regain that ground once you've lost it. Because if you lose 70-80% of what you got, trying to regain that back, I mean, you have to get way more than 70% to get back to even, right? So if you lose 70, to get back, a 70 doesn't take you back to where you were, because the percentage of the loss brings you down. You need far more than that to get back up, right? To get back to where you were in terms of a gain for a 70% loss. So losses affect you more than the gains do. So really, long story short, you got to try to avoid years like this year. So yeah, man. So kind of going forward, I mean, again, hold on for dear life. No idea where it's going to go next year or anything like that. I mean, personally, for me, I haven't sold anything. I'm just like, just letting it fly. Whatever happens, who knows? But again, if you can stay extremely well diversified, then that's good, right? And same thing goes for stocks. There are people who are like, oh, I don't do that. I got everything in stocks. Like, okay, well, which stocks? Like, where do you got it? Is it one country? Is it one sector or something? You might want to think about diversifying out more, right? Into different sectors, different countries. Worldwide, you want to get some other kind of assets like bonds, mix it in there with maybe some gold or something else to, even it out, really diversify that thing down to where, it starts looking like, instead of just a pie chart, all solid one, you start to see all the slices of different things, and that's what's going to protect you against the downturns when downturns do happen, like 2008's or, if you're into crypto this year. So those are kind of my thoughts going forward for it. I mean, I do still think that there's good potential for it in the future. And the volatility, as extreme as it is, it's like, does that really change the fact that it's still something that that could still do really, really well in the future, like it has done this many times in the past before too, where, a lot of people wanted to get in, a lot of people wanted to get out, and this kind of deal. So we'll see. But I'm thinking 2019 it definitely should be a better year than this year, right? I mean, if it falls another 80%, it's like, or 70%, then you're getting to the point where anybody who's held has basically lost pretty much everything, right? Like down to like, almost nothing at that point in terms of percentage from where it was at last year. So so let's hope that doesn't happen. But just in case it does, you got to diversify as much as you can. Anyway, that's it for this video, guys. Let me know what you're thinking. Bitcoin absolutely getting crushed in 2018, and hopefully 2019 will be a better year. I think it will be. I mean, that's pretty tough, man. Down to, that's. I hope none of you guys held a lot in it, like a lot of what you got in it, because I saw articles of people selling their houses to get into Bitcoin. Stuff like this. It's like, oh my God, they might be ready to jump pretty soon after this year. So yeah, let me know what you guys think, and that'll be it for this video today. I hope you guys liked it. If you did, thumb it up below. You can share, you can favorite, and if you're new and you want to subscribe, bottom left to subscribe. So for this one, see you guys again soon for another. As always, this is Trev, and I'm saying peace later, guys. See you soon.